Hi everyone, welcome to another video by Optionables. My name is Saket, and in today's video we are going to look at what happened to the markets on Friday and what is the outlook for the market for the upcoming week. If we actually look at the US markets on Thursday and see what happened, Nasdaq almost ended 5% lower, and not just that, even Dow Jones and S&P both ended around 3.5 to 4% lower. And this was a huge move, one of the biggest falls you can say in maybe the recent times. And the thing is, the same sentiment was followed onto Asia as well. Indian markets ended up opening itself around 1.6% lower. They opened somewhere around 16,400 itself. But the thing is, Indian markets ended up consolidating throughout the days. When I put the intraday chart of Nifty, so we can quite clearly see here that Nifty consolidated in and around 16,400 throughout the day. But the only thing is, there were some intraday swings which we were witnessing, and these swings weren't of small magnitude. So the thing is, the difference between here to here is almost around 100 to 120 points. And when we actually look at it, so we do see that there's a 120 point down move here, then around 60-70 point up move, then another 120 point up move, and another 100 point down move. So the swings are of great magnitude, and on chart it looks as though the market ended up consolidating around 16,400, but it was swinging up and down quite violently. So when we actually look at what happened to the VIX, so VIX is going to give us a fair idea of what is the level of uncertainty out there in the market. Surprisingly, even with the big crash of around 1.6%, VIX only managed to go up by 4.7%. When I put the VIX chart, we do see that the VIX had come closer to 22. So it was up close to around 7 to 8%, but later the VIX cooled down and it ended just around 4% higher. That's the reason we saw that even though the market was consolidating around 16,400 itself, there was no dip in the premiums of the option up until afternoon. Only after afternoon we started to see that the premiums of the option started to fall. Up until then, the short straddle absolutely gave zero profit or loss, because even though the market was consolidating, the VIX was continuously going up. So this is one more thing what we should note, that towards the end the VIX started to cool down and we just ended around 4% higher. Now coming to what happened to the FII DII data. So here again we do see that FIIs ended up selling close to 5,000 crores and DIIs purchased around 3,000 crores. Again, maybe when you look at this figure, I do remember some heavy selling happening in April. If I am not wrong, since the April first week, this is the first time they have sold over 5,000 crores since over a month. So when there is such heavy selling, we can expect some huge selling in FII favorite counters. So coming to FII favorite counters, we should have HDFC Bank, Kotak Bank, Infosys in the list of top losers, and we can see all these heavyweight stocks ended up losing somewhere around 2% each. Infosys was down 2.5%, HDFC was down 2%, HDFC Bank also was down 2%, and Wipro here was down almost 3%. And all of these are heavyweights, and all of these ended up crashing close to 2 to 3%. Whereas when we come to the gainers, we had a handful of gainers, but the thing is, none of them were significant in their weightage. That is first thing. The second thing is that if you see the total advance and declines, so there were 11 advances, but out of 11, hardly there are 3 stocks which actually ended up going well above 2%. And the thing is, we have also been hearing about the bond yields going up. So I'll just show you the US 10-year treasury yield. So you can see during the time of December, it was close to 1.5 and 1.4. That means the returns what you would get by holding these treasury bonds up until maybe 2021 end was just around 1.5%. But you can see from 2021 end, when we come to 2022, the bond yields start to go up, and now it is somewhere around 3.14%. That means before whatever you are getting, you are almost getting double the returns. And US treasury bonds are supposed to be the safest, and generally in US the interest rates are very low, and 3% on a US treasury bond is quite high, to be honest. So if we look at the 5-year data, you can see that the yields are almost back to the pre-COVID levels. The thing is, right now the stock market is at a very high level, and from here, when the bond yields start to go up, people usually start to pull out money from risky assets like stocks and they put it in safer assets like bonds. So because if bond is giving you more returns and treasury bonds are supposed to be the safest bonds, when they themselves are giving you more yield, then it is natural for bigger institutions to put some money to safety by removing from equities and putting it into stocks. And that's the reason we are seeing such huge sell-off even in the US market. The 1 year picture is going to give us a better idea. And the thing is, not just this, there was also the job data which came in US and it was more or less mixed. It was not that bad. So US markets which were seeing a sell-off saw some kind of consolidation post the data. So that is one good news because US also kind of started to consolidate. But we can't definitely say we are out from the sell-off or the market correction has ended. So that is something different. But good thing is that we didn't see the sell-off continue further in US. Now we'll be discussing quickly about what we can expect from the markets in the coming week. Right now we have just discussed about the market data, but we'll also see what we can expect from the market in the coming week. First, coming to Nifty. So Nifty, we do see when I put a daily chart. So you can see that 16,800 level was acting as a very strong support for Nifty, not just once, but couple of times earlier. So you can see it acted as a good support here, and so on. So multiple times Nifty had taken support at 16,800 and finally Nifty ended up breaking 16,800. Not just that, we did see a huge gap down and also a convincing close below 16,800. So that will bring us to the next question, what exactly we can expect from the market for the upcoming week. So my particular idea for the market would be somewhere around 16,000 to 16,800. So a 400 point range up and down, that is 16,000 to 16,800. So this is the area where I am expecting the markets to consolidate. And based on this view, I have also done a short strangle at 16,000 and 16,800 for Nifty. So this is the broader view what I have for the market, because again 16,000 is a very strong support for the market. So just to give you a better picture, let me come to the weekly chart and you can see this level is 16,000 and this is a very strong support for the market, and I particularly don't expect Nifty to break this level at least before this expiry. So that outlook was for the charts, but when we actually speak about open interest, so we clearly see that there is more number of calls compared to puts, and this is a given because we saw such a huge sell-off and people have sold calls aggressively, especially at levels of 16,700 and 16,800. So there is huge call selling at 16,700 and 800. But also what we should keep in mind is that there is no significant put writing up until 16,000. So there is some short straddles which are created at 16,400, but at 16,000 we do some very strong put writing. We do see some very strong put writing. So given this, again, my range would be much more similar to what we discussed on the chart, that is 16,000 all the way to 16,800. But one thing what we should note is I am slightly bearish on the market because it has broken its important support levels. Right now there is global sell-off which is happening and FIIs are continuously selling, and we do also see a lot of calls which clearly shows that the sentiment is also bearish. Now quickly coming to Bank Nifty and what we can expect from Bank Nifty. So when we talk about Bank Nifty, first we'll actually look at the daily chart itself. So 34,000 is a very strong support for Bank Nifty. So not just once, again over here when we are actually looking at the weekly chart, and when we look from July 2021, we can see that not just once, how many times Bank Nifty has actually taken support at 34,000 on a weekly time frame, and this level is going to be very crucial for Bank Nifty. So coming to the resistance, when I actually put the daily chart, we do see that 35,500 had acted as a very good support for Bank Nifty. So we again see on a daily chart, it had taken support multiple times and it had bounced back, and 35,500 is now definitely going to be a very strong resistance for Bank Nifty. But given the range, I would pick, based on the analysis what I have done on charts, so I would be comfortable with a range of 33,500 all the way up till 36,000. So this is a range which I'm more comfortable holding, because the other range what we discussed, that is 34,000 to 35,500, is just around 2% away, and given the level of volatility, it won't be of a surprise if Bank Nifty actually ends up breaching those levels. So I would be more comfortable having my ranges at 33,500 and 36,000. So let's also quickly look at the open interest, and we'll see what that is suggesting. So when we look at the open interest, we do see strong writing on the call side, but very little writing on the put side. So 34,000 is one strike which has at least the highest number of puts as what we can see. But on the call side, there is significant amount of call writing which has happened. So the trend again seems to be quite bearish, but hopefully we can find some support at lower levels. So based on the market view, so I would be comfortable. Here I have just opened Bank Nifty option chain, and since the VIX is also so high, I would be comfortable with doing a FAR OTM short strangle, just because the VIX is so high. So we can just do a 36,000 call short, which is trading around 44, and also a 33,000 put option short, which is trading around 55. So together we are almost getting around 100 rupees. And considering it's 1,500 points away, the premiums what we are getting right now is quite attractive, to be honest. So I am expecting Bank Nifty to trade between 33,000 and 36,000. So this is also the trade which we personally hold in our account. So one is the Nifty trade, which is 16,000 and 16,800 short strangle, and 36,000 and 33,000 short strangle. So these are the trades which we actually hold in our personal account. So we have gone around 1,000 quantity in Bank Nifty and 2,000 quantity in Nifty. So that's for the market outlook. And coming to what happened to Friday's trade, since we had a short position, the intraday trade didn't go that well, but overall we still ended up making around 1.3 lakh total M2M. So right now it won't be visible because today is a Sunday and the M2M prices would have been reset, and that's why it would be showing 0. But overall we ended with a gain of around 1.3 lakh. So this is the market outlook, and also what happened to the market, a brief market summary, and also some trade ideas. So the trade idea what we are personally holding is a 33,000, 36,000 short strangle, 16,000 and 16,800 short strangle. So this is the summary of the trade. With this we also come to the end of this video. If you have liked it, do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining.